If you're preparing for your taxes this month, here's a question to ask yourself. How tax smart are you about your health care expenses? According to financial advisor Wade Brittingham, health savings accounts and flexible spending accounts may be two great ways to lower your tax bill with Uncle Sam each year, plus save money on out-of-the-pocket health expenses. With more of that today, Wade is here with us to fill us in on. Let's start with what HSAs and FSAs are, because I'm not that familiar with those.
HSAs and FSAs are health savings accounts for out-of-pocket medical expenses that you're going to get from your Human Resources Department and your benefits at work.
Now, you were saying earlier that a lot of people don't take advantage of these. I'm pretty sure we have the opportunity to do it here. I don't do it because when I see that, I think, well, I'm not going to put money into a health savings account. I'm a pretty healthy guy. It's just me. I don't have kids. I don't have to worry about anybody else. But you're saying that's the wrong thing to do. Not
necessarily the wrong thing, but you might want to think twice about it. These are great ways to lower your taxable income each year. Your funds are going to come out of your paycheck prior to Uncle Sam taxing those funds, and they're going to go into either one of these accounts pre-tax and allow you to basically save money on any out-of-pocket expenses that you have.
All right, so I put the money in there from each paycheck. What happens if I don't use it?
Well, that's a great question. There are two different accounts, right? So one of those accounts, the health savings account, will allow you to carry those funds forward every year, so you're not going to lose access to those funds long term. The other account, a flexible spending account, you actually have to be very careful about putting money into that because you can only roll forward $500 each year if you don't use that money.
Okay. And there might be a misconception that if you don't use it, you just get to take it at the end of the year. No, it doesn't work that way.
That's not true. So, yeah, there's a lot of details here, so we have to be careful of the details.
Sure.
The general guideline that I like to tell our clients at the office is that if you're a healthy person, such as yourself, you're going to want to use the health savings account with a high deductible health plan, because that allows you to move the funds forward each year. You're not going to lose them if you don't use it during the calendar year. The flexible spending account, that's much more focused on using the funds each year, so you don't lose access to the money you put in the account.
Okay, what are the tax benefits?
Tax benefits are huge. So this money comes out of your paycheck prior to Uncle Sam taxing the money. So it's just like your 401k. It's a pre-tax benefit, goes into either one of these accounts. The money grows tax deferred, and then when you pull it out to pay for out-of-pocket medical expenses, this is completely tax-free.
Wow. So let's talk about that, the paying out-of-pocket and the expenses such as copays and stuff.
Right. Deductibles, copays, any expenses related to health care that you're going to have that your medical plan is not going to cover, or your health insurance is not going to cover.
Right. So why do you think these accounts aren't used more frequently, and why aren't people using them?
There's a lot of people are healthy, such as yourself, so they look at these plans as, oh, that's only for maybe someone who's got a lot of medical problems. So I think that's the first issue. The second issue is there's a lot of confusion because there's more than one type of plan, and people tend to be a little intimidated by all the details.
Who do you contact if you want to start opening one up and begin contributions?
So that's a great question. So you're going to have to open these accounts during open enrollment with your Human Resources Department at work, number one. That's usually only about a 30-day window once a year. And you're going to have to contribute to these every 2 weeks from your paycheck or every once a month, however often you're paid. And that needs to go on throughout the calendar year.
Okay, so good information. And of course, they can always get expert advice from you guys, and we had the number on the screen. And of course, we appreciate you coming in today. It sounds like something that people really should consider doing. That, again, it's one of those things that when you're sitting there on the first day of the job, you don't think about it right away, you know? And it is something you should definitely do. EBWLLC.com is the website, or EBWFinancialNews.com, or you can call 703-506 0030 if you have more questions. They'd be happy to answer those for you. Always great to have you guys on. Wade, thanks so much.
Yeah, thank you.
All right, and we're back with more of Let's Talk Live in just a moment.